Jesus help us. All right, let's talk about the daily, how to use the daily candle for entry.
Yeah.
Now, the principle is very simple. If you want to use the daily candle, don't use it in isolation. Don't use it in isolation. No, it's not done. You get now? You want to
Yes.
use it in line with structure. Okay? I want to start from the very far. Let me start from around this one. I want to start from far distance. If the daily candle close bearish, the next day just look for bearish entries. Are you following now? If the daily candle close bullish, look for bullish entries. Let me repeat. If your daily candle, yesterday's daily candle closed bearish, look for bearish entry the next day. If your daily candle closed bullish, look for bullish entries the next day, above or below or at opening price. By structure, this is what we have by structure. High, low, right? High, low. Is that not what we have? Now we have
Yes.
a
Yes.
high, we should have a low.
Yes.
So I'll leave all this annotation here. Let me now show you how to use that daily candle. Let's come here. Look at this candle, this one. This candle closed bearish. So what am I expecting to do? If I want the next day to open, I will mark. This is the same thing I use for currency. So I use this for currency. Like this is what I mean. Actually, I was learning something. One of my boss was teaching me something. This is what he was teaching me all this while. Is what I thought on synthetic. I didn't know that I can apply it on currency and just rest and just rest. Like I just rest. So this is the low of the candle. This is the high of the candle. Just mark the previous day. So I'll call this previous day high. Previous day high. And this is previous day low. Let me extend this to this place so that previous day low. This candle. So is this candle I'm concerned about? This candle. This is what I'm concerned about. This candle. So what it means is that since this candle closed bearish, the next day I should look for bearish entries at opening price or above opening price. So I'll click on opening price. This is my opening price. It's my opening price because it's where that candle closed. This one will open. You get it now. So let me call this opening price. Let me just put opening price. You know what it means now. So opening price. I wish I can get 5 minutes of this entry. Let me see. So 5 minutes.
You can't get it. It's so far.
It's far, right? It's far. It's far. We can't get it.
Let's check 15. Let's check 15 minutes.
It's far. 15 minutes. Let's see. 15 minutes. Okay, I think we're going to fetch it 15 minutes. Okay, 15 minutes. So previous day versus previous day high. So
The previous day low.
now a candle will do two things: either take previous day high or take previous day low, like I explained to us just now. Because price is moved by liquidity. Liquidity. Price wants to take liquidity. What's liquidity? Where there are previous buyers and sellers. All right, that's where price wants to take liquidity. So okay, fine. So price open here. That was here. You see, it's 00029 of of June 2020. This candle was bearish, so I want to look for only bearish formation. It's 29. Let me look at where 29 stops or 30th. Yeah, so within this place, that is 29th of July, open to close. Is that okay? So let me zoom out. This 15 minutes. Since we know that price was bearish, any bearish move is good to buy. So what are you saying? This was a bearish move, a breakout structure to the downside. So when price opened here, price broke structure to the downside. When price broke structure to the downside, this way you now apply every other thing you find. Are you seeing? IPA, that's where price came into. Most times I play the breaker block. It's a breaker block I play. What's the breaker block? This place where price broke structure, this place. That's the breaker block. This last sell candle here, that's the breaker. So you see me mark something like this on my currency pair. That's the breaker. That's where price will go. So I won't even mind the IP. If the IP is there, it gives me a better confirmation that price is actually coming there. But if I don't want to lose it, I just play the breaker. Sell. I have my entry on this breaker. Open up the breaker. That's what I do. Open up this breaker. This sell. I'll give you other examples so that you see. Then stop loss at this place. That's 8 pips. And then I want to take price down. Why? Price has already established that the previous day was bearish. So I know that the next candle will still be bearish. So that was the move for that day. The 1 to 3 was secured. 1 to 3 was secured. I'm going to go back. Let's look for another candle. Now this is traded in line with the trend. Last candle was bearish. You don't want to look for a bullish play today. If Monday candle closed bullish on currency or on synthetic or whatever, the next candle is going to be bullish, except that maybe price is trying to capture liquidity at your point of interest. That's where you're going to have price stalling in one position and all that. But if it's already an established trend like this, this candle closed bullish. I know this candle will be bullish. I know, I'm sure. This candle closed bullish. I know this next one will be bullish. Okay, it's already an established trend. Price already coming and this candle was bearish. So I know this candle will be bearish. So what can you find? Price open and came to take the high of the previous day. That's it. So that this candle open, when this candle took the high and took the low. So let's assume, okay, I'm waiting for a play here. Any break to the downside, and price kept buying and buying and buying. I will keep hoping for that bearish formation. I will keep hoping for it. So let's go for this candle. Let's check it. This candle was an established trend. So this is the candle I'm looking for. So what am I going to be looking out for? Let me just draw. Let me leave it. Previous day high, previous day high, previous day low. So let me annotate. Previous day high. Yes, if you get this concept, it's very interesting. Like it's very interesting. Previous day low. I tell you what this. I didn't know this.
Are you recording?
What? Eh?
Are you recording? You are recording, right?
Yeah, I'm recording this. I'm recording it. So previous day high. Let's go to 15 minutes. I used to like 35. No, that's currency. I used to like 35 minutes. Let's see if we can fetch that for 15 minutes. We should be able to do that. Okay, I hope we do that. Yeah, this is it. So I zoom out. What I'm interested in is my previous day high and previous day low. Because these are liquidity zones. Price will come for previous day high, previous day low. That's liquidity zone. Previous buyers are there. So since I know price closed bearish, I'm looking for any formation that is going to give me bearish momentum. Previous day high, previous day low, establish. Now price open here. What am I looking for? I'm looking for that bearish move. Now, I can prefer 5 minutes. Let's look at fetch 5 minutes. We should be able to do that. Okay, let's look at fetch 5 minutes. Russia to us. Oh, 5 minutes not there. I used to prefer 5 minutes. So you know, if you are on chat when this thing happens, it's very sweet on 5 minutes, like it's sweet. Look at, let's manage 10 minutes, let's see. So I like the breaker. Okay, I like play the breaker. Look at it, previous day high established. Some of you used to see my currency chart like this: previous day high, previous day low, price now open. I told us that if price open and start going up, high possibility we are going to sell. That's candles behavior. So some of you that have not studied candlestick pattern, I'm using style to teach you candlestick pattern now. Once the candle opens from here, this was the opening price, and price are buying up. Just know that we are going to sell. So price bought up, watch. Price came, that was the sweep of liquidity, price broke, that was the break of structure. If I was on chart, I'll play this. Price didn't get to about that, I would enter in on this candle. I will enter on this candle. Because currency will not wait for you to go and okay, set stop loss and all of that. See, that was the candle that broke the structure. It was this candle that broke structure, that candle. So why smart money traders will be waiting for price to come back to this IPA? You get the logic now. Price didn't come back. Price broke, this candle closed, and price played the breaker straight. So I would have played this breaker. Stop loss here. And I played that breaker. And I know that my next target to be previous day low. And since we are bearish, I have the high time frame bias in mind. Then I can just hold price till price do otherwise. And price gets like pulling down. I'm going to check the next candle. Price get pulling down. Price gave a 1 to 6. But price get pulling down. Let me put stop loss on. This is 16, 16, this 17. 17. Okay. So 17, the power price did, price open, price has taken previous day low that same day. Price took that. So the next previous day high was here. Previous day high was here. But on the 16th, this was previous day high for 16th. This was previous day low for 16th. So before price closed, price took the low. What can you find? Price opened here and pushed up, gave us a break. That's a break. So I wouldn't have, once I see this break, this last candle is sweet for entry. Once price break, this candle is sweet for entry. Price will always come back to weaken and run away. Price weaken, close this imbalance, and price run away. That'll be your entry for that day. Have you seen this on some of the chat I sent? Have you seen this on my chat? You should have.
Yes,
Boss, this Chifu.
So on the 17th, let's see 18. 18 close, price open around the zone, fine. I still know that we are still bearish until proving otherwise. So previous day high is here, previous day low is there. Let me see, previous day high, previous day high, previous day low was that. So price open here. What I'm just looking for is for any break below. You see, price gave us this break. Is that correct?
yes, sir.
Yes, price gave us this break. And you played the breaker and you were taken out. Play the breaker, you were taken out. It's fine. But you know we're still bearish. So wait for another move. Price kept moving up, and price came and us a sweet break here. If I'm on chart, I will enter on this breaker. If this candle closed below, I will enter on this breaker. And this would have been, but you see, most of these moves will happen midnight or early hours of the morning. So you just have to pay the price to get the move. Look at it. All of this move, it would have been on this move, a 1 to 6. So if you can just be waiting for, sorry, this is 18. Let me look at where 18 stops. It's 18 around here. Oh, you held that entry. That was the entry that was held for that day around this place. Maybe around this place. Yeah. You got that entry here. Price open. You got your entry and price rallying down all through the day. So if you keep checking it day by day, and this thing calls for focus, you have to just stop flying everywhere. Like somebody sent me some charts, they sent me like 5 different charts that these are the assets he wants to concentrate on. I said, okay, when I'm struggling to concentrate on only 2, you want to concentrate on 5. 5, young man. And I asked, is it not too much? He said, no, he can cope. I said, it's all right.
Chief.
Yes. So you can take this, you can take this, you can take this, you can take this. Let's check this bullish run. Now, watch what happens here. Watch. When price was like form of choppy, price was looking for previous week low. This was a previous week low. This was a previous week low. Price have to take it first before price went up. Because this was July 19, July 20, 21, 22, 23, and price came back 28 to come and take previous week low. And that's what we call a break in market structure. If price is going to change from a bearish trend to a bullish trend, price will always take below. Price will take below. So price took previous week low, and this candle closed bearish. So if you wanted to see the bearish here, you would have been wrong, because this candle took previous day low and previous week low, closed bearish. So you might not be able to trade this day because you might be confused. Okay, coach told us that once the candle goes bearish, look for bearish momentum. Not putting other ingredients into play. But if you put other ingredients into play, previous day low has been taken. Look at previous day high standing here. That's to tell you that price should go for the high. Look at previous day. I'm talking of this candle now. Previous day low was captured. This candle captured it. But look at previous day high was here, not captured. So that's to tell you that price will come for the high. Price has taken the low. Because that's what a candle does. Low and high, low and high. Check this candle. This low was not captured. This candle came up, couldn't capture the high. What did this price do? This next day captured the high. This one captured the high. This one captured the high. This one captured the high. When this one came, captured the high, captured the low. This one did capture the low. So the bearish trend has been established again. If this one open, we should capture this low and price capture the low. If this one open, we should capture the low. We capture this low, capture this low. So you're expecting that we should still capture the low, and it didn't work, and price now captured this high. So it means that this bearish movement had ended. Then price came, poof, look at that move. Let's see whether I would have gotten an entry from it on this candle. I doubt. This candle moved so powerful, like, oh, let's say 5 minutes, if we have gotten entry on that candle that day.
Femi got that trade.
Femi, yeah, he got it by playing smart money. Yes, he got it by playing smart money. So you are not just trading anything in isolation, you are trading everything in line. So smart money provided an entry before that day close, break of structure, price came back here, price broke, price came back to this place. So that was the sweet entry. Now, if you come here, what am I talking about. Price should just open, give you any formation. But look at the price scale. Price has already created the formation before that day. Price already broke. That was the formation created. Price broke. So you should have expected price to come back to this zone. Which price tested before the day? Price tested it the previous day. You got it. All right. Good. Price already created that formation for you the previous day. Price broke above, came back to the breaker block or the IPA. So, but when price now opened with this candle, price didn't come back. But if you understand this, you know that so long this has started, price has given that formation already. If price should break below again, it will be a break of the structure. The price should, after giving this high, low, high, price already traded into this breaker. So smart people, I know my boss will take this. If my boss sees this, he will take it. Since the previous day has created that structural point, he will take it. Take his stop loss here, or this IPA, he just put the stop loss here. He knows how to risk very well. His risk is always very powerful. And he would have been on this trade holding it like held it. He made over $4,000 from Euro USD last week, like mad. And this is what
One
he just played. Just one trade, one. He just played this. He made this money. You know? These are trades. So I just had a sweet 1 to how many? I don't even see the risk to ratio. What did I do? I used the wrong Jason. I used the wrong one.
I was like, what happened now?
I'm surprised too. That was a 1 to 5. Beautiful. You're about 1 to 5. So that's just it. That's just it. Question.
I've sent me want to speak. Oh, can you will you
Okay.
unmute?
Sorry. Mr. Femi, sorry. You can, okay. Sorry, sir. Sorry, sir.
Hello, sir. Good evening, sir.
Yes, good evening, Mr. Femi. Go ahead.
Yes, so this thing that you are talking about now, this was what I was asking you, if you remember, early last month, previous day, you will see on my this thing that I used to send to you, previous day taking sweat, previous day low sweat, but there was no response. I said, okay, I don't want to go beyond what coach was
Okay,
doing.
can I
That
remember?
was
But I
why
know I told us that
that was why I
I'm
just
trying to work on something. That was what I was working on.
yes, that was what you told me that period that you
Yes, I
were
was trying
busy.
to, I
So I
just
was
wanted
like,
to get the concept complete.
okay, because I was just then this volatility 25 that by Mr. Samine was talking about.
Yeah.
There is something you taught us. Immediately price took out the previous day low
Yes.
and closed above, as in with week. So when I saw that week, I told my people that Mr. Samine group that no, the bearish this thing has changed. So we should not look for sell again. We should just look for buy. And when I went to monthly, I saw that on monthly we were bullish, even on weekly.
Yes.
There is what we call rally based rally. I saw that very clearly on monthly. So that was when I knew that price will go up from that place. So as soon as that week, yes, they use this week now to clear the previous low, previous day low. Then price close above that this thing. Yes. So we now waited for yes. It took this week now. They close. The candle did not close with the body.
Okay.
So it didn't close with the body. So
Yeah,
this week now, yes, it just cleared this place. So as soon as I just told them that no, we should not look for sell again. We should just have to look for buy. That was when we now waited for that smart money play to give us that entry. Now we took the price to where yes. Yes, we used 15 minutes to enter.
It's a very sweet play. I saw it. Very sweet. You really hit it.
We use 15 minutes.
So you see, price always take liquidity. What price
Yes.
price will always, like Mr. Daniel asking me, price will always. Yeah, price will.
True.
Price did give you a break of structure, and then you start looking for entry. The price gave you that first move. Even if you didn't catch this first move, there's no problem.
I caught the first
Allow,
move. Oh.
you caught this first one?
Yes.
That was beautiful. Allow price to give you another confirmation. So price came into this candle here.
That demand
Entry.
demand
Yes.
this thing.
Sweet demand zone. Price now give you another break of structure, telling you that I am serious. Like I'm serious. Then you can now take 50% of all of these, which you have taught, other concepts that you can see. Just set your limit. Even if you set your entry on the 50%, it's fine. Like it's fine. This is a lower time frame. How much could you possibly be risking? It's 12 pips.
Even the IPA there, you can tap
Yes.
at the opening of the
The
IPA.
IPA.
Yes. Yes.
So if you
Yes.
had your IPA in mind,
IPA there.
you see, we used to play
Good.
IPA,
Very
open of
yes,
IPA. So if you, I think this is where, Femi, this is where you played now. I saw your chat.
Yes.
That was
Yes.
beautiful. So
There is
we
something
start-
I noticed on this thing too. Now,
right.
even on 15 minutes, if price as in period to PMS and price left a small wick on 15 minutes, immediately candle close below that wick. We should not wait, as in we should just go back. We can go to 5 minutes. We will see that very clearly. That price has broken structure. That is what I noticed.
Can you come
I've been
again?
trying that. Can you hear me now?
I can hear you. Just repeat what you said.
I said on 15 minutes, once we return back to 15 minutes from daily point of interest,
Yes.
and period to that break of structure, as in BMS on 15 minutes, if we see any week, as in price left any week before that break, or if you want to buy now, price left just one small week, that small week is a demand zone. Once price close below that demand zone, we should just wait for price to return so that we'll be able to buy or sell from. But if we are waiting for normal, as in that feasible break of structure, at times we will miss the entry. That is what I've been following for the past.
Can you annotate? Can you annotate? Are you using your phone?
Yes, I'm using my phone.
Try if you can
And I'm
annotate
using.
We have 4 minutes.
We'll create another link.
Won't you sleep, young man?
Okay, we will not sleep tonight.
Are you a single man?
We will not sleep. We will not.
Okay, I have a wife that needs money too.
Before it's 1,000 naira per liter. Where I stay. So
can you annotate, Mr. Femi?
It's like yes. Well, okay, maybe. Please just zoom out a bit, zoom in for steps so that I can see. There's something I want to show us from that
Let's
place.
Zoom out, or is it enough?
Yes, it's enough now. Like here now, if price is going up now, this one now, like this week now. Yeah, I can't even see this thing very well.
Maybe you should still zoom in a bit.
I can't see this thing very well.
Can you zoom in a bit, please? Maybe you should make it bigger a bit.
I'm using my let me just do this so that maybe I will see the thing. I can't even move the chart.
No, I'm not supposed to move the chart. I'm just supposed to write on the chart. That's annotation.
Because I'm seeing something. So there's something that covered my screen from something just covered.
Maybe we just put another link and I can co-host you.
Give the host.
Who sent? Okay, I created this link. All right. I can't create again. Someone else should create and send to us. Let's go.
Okay, let me try creating and send.
Jesus, thank you. All right, guys.
Now you save the record.
Yes, I'm